And I just want to, as you guys know, this is 2019. It's definitely a gold breakout, but look right here, guys. Be careful because we are not. It's obvious that like we've had a breakout for the last few months, but look when we zoom out to years back. It's still a great time to accumulate, but I would wait for some sort of dip here before accumulating more. There's probably going to, like, it usually goes up a lot, then it comes down, then it goes up a lot. It depends also, remember, how much do you have? Do you already have many ounces of gold? Or do you have any ounces of gold? If you have no ounces of gold or no gold, I would just get in a little bit now and then just wait for it to ride up. There's different things. You can accumulate for the long run, and during accumulation, you should accumulate all down here. Because look when you zoom out. Let's zoom out all the way back to 2000. Where would you rather accumulate? Would you rather accumulate down here, up here, or down here? Let's bring it back a little more because we're really in the every decade is very, very different. Right here, we hit this peak back in 2011, right after the recession in 08, 09. There was a run up on gold because of fear, and that's usually how the gold market is driven, which most markets are driven by fear and greed. Go back to my other videos on fear, greed, psychology, and emotions. But then there was a sell-off when people like got euphoric about stocks, and we've been running that for a while. But right now, since 2018, there's been some negative sentiment. It's 10 years off of the last cycle. We're very likely to hit a recession. So I think gold is starting to climb a lot, and this has happened in the last few months. There's been this huge run up on gold. It's gone from 1300 back in March 2019 all the way up to 15. We're actually near 1500, so we're actually way up here. This chart's a little lagging, so we're right up about here. But anyways, I want to show you guys this to show you we're not that far. I mean, there's the accumulation where you accumulate and hold for long term, and all this is a good time to buy. 1300 all the way up to 1500, 1600 is a great time to buy. Even like right here, just buy up and accumulate and hold this. Hold about, I'd say about 5-10 ounces of gold. So have about $5,000 to $15,000 in gold now at gold's price now, and then just hold that long term. Don't jump in and out with your main gold holdings. And this can go with silver too. That's why I wanted to actually come down here and show the gold to silver ratio and why I actually think you should be buying more silver now. And there's other things. There's like minor stocks and gold stocks, and there's less gold in the ground. It's getting more. So there's issues with that, and then also when you go with gold miners. So let's see down here, we're all the way back in the 1920s, but let's bring this all the way up to 2010. And I actually like to go back to about 2008 when the last crash happened. This is what happened to the gold to silver ratio. It dropped tons because there was a time there where silver just spiked, and when silver spikes, it changes this ratio very low. I don't know if we're going to go down to 30 or 40. We just don't know. But when you zoom back out 30 years, let's go back all the way back to the 90s. Look how high we are on the gold to silver ratio. This is how many silver ounces equals 1 ounce of gold based on price. I do understand that gold is the ultimate money currency reserve. And a lot of governments are buying it right now, and I think that's the reason to be buying a lot of gold. But I'm holding this gold silver in this exact ratio because I think there's going to be a lot of silver trading at some point, and when that happens and this silver gold silver ratio goes down to about 60, I'm going to sell off a lot of my silver and put it into gold. I'm saying that like I know for sure it's going to happen, but we don't know for sure. But either way, silver tends to lag gold from the general sentiment is that it lags gold and then it spikes when it spikes. It's kind of like gold on crack. So I think it's a little depressed, and I think that now is a great time to buy silver. check out this website, macrotrends.net. You can look back on different ratios, silver prices. Here we can look back on silver for a 100-year history. I think that try not to feel that fear of missing out and just jump into gold and silver right now. I think you should do your own due diligence and your own research. Go back on my videos, look at some of the purchases that I made. It gives you on how low you can get gold and silver if you just kind of play it like a slow game instead of a quick game. Here's where silver spiked in 2011 all the way up. It was almost at $50 an ounce, and then now it's all the way down here at 15, 16, and we're almost to 17 actually right now. This is a macro trend chart, so it's a little lag, but we're up here. So it looks, if you look back, just a little bit, like the past few years, it looks like we've spiked up a lot. But when you zoom in, it looks like we've spiked up a lot all the way up here. We're up here about 17. But if you look at the long-term trend, we're way off our highs. I think that you can still accumulate a lot of silver up to $20 and just hold that. So you should, for me, I think everyone should hold like at least 1,000 ounces of silver and 10 ounces of gold, and that should be your long-term play. But right now, if you're young, maybe you can buy in and out and take some more risks. Maybe you can, buy some miners, but it's kind of like stacking. You've got your base, and most of it you want to just accumulate during these times, dollar cost average, which just means you buy over long periods of time, little increments. And if you got to play some catch up, just go ahead and just buy more now. This is just basically what I'm doing. Past year, I've accumulated about 1,000 ounces of silver and 12 ounces of gold. Plus, I bought a lot of gold, silver, miner stocks. I'm going to go more into the miner stocks, GDX, SILV, SILVJ, which is junior silver miners. There's all sorts of ways to play the silver game. But I think that the majority of it should be in just gold and silver. So once you hit 80% gold, silver, hit that 1,000 ounces of silver, the 10 ounces of gold, then you can play a little more with the gold, silver stocks. All right, guys. Well, congrats to anyone who's been in this game for a while and you're seeing this spike. But in the long run, guys, look 4 or 5 years back, which is not even a long time. It was up at 18. It was up at 20. It was up at 22 in 2014, and back this is not that long ago. Back in 2013, it was up at $36. So that's only 6 years ago. So let's keep ourselves in check. Let's not get too ahead of ourselves. Don't think that you've missed the train, but also don't sell off all. Don't make rash decisions without checking yourself. And what I do is sometimes I just go on eBay and I bid on some cheap one ounce coin, and I'll bid $16, $17, $18, $20 on a coin that's worth about $15 or $16 now in silver spot. And I just do that to kind of like quench my reptilian brain. I say, the scientists, they say that we still have our reptilian brain and we feel emotional about investing. And whether we say we do or not, you've got to check your ego at the door and just try to stay diversified and think about the long-term trends, not just these short-term bounces. All right, guys, Metal Bums out.